Oh, this is going to be fun. This is going to be fun. Greetings, 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 everyone. The reason why I always look down at my computer is this freaking thing pops up that says your meeting is being live streamed. Yeah, no kidding. I don't know how to turn that off. Looks like we're coming through on the YouTube and it is not going to blast our ears. Yes, that's true. Okay. All right, guys. Sorry about that kind of clunky introduction, but you know what? You get what you pay for. It's the price of your subscription, which, by the way, subscribe down below. Hit it. All right. And smash the like button and please comment. That would be very helpful to the growth of this show and to evangelize Epic. We need more people that are watching this show so that we can keep them updated and educated. Like we're going to educate you today. I have Max Freeman on. Max, thanks for a double header. You came on last night with me and we talked about surveillance capitalism and the importance of privacy and Mimblewimble and McDonald's. So I really, really hope everybody goes back and watches that. And there's a spinning clown portion of it that I think you'll enjoy. So today, the live stream is called To Market Make or Not to Market Make by Shakespeare. That is the question these days. That's the 2022 question. If Shakespeare were, oh shit, what happened? Oops. Uh-oh. All right, I'm not touching anything. Can you hear me, Max?
Yep.
Man, oh man. Okay, I'm not touching anything because something just went out on me. All right, so if Shakespeare were alive today, with today's technology, he would have written to be or not to be, to market make or not to market make. What is market making? We're going to talk about that, but I want to set the table first, okay? So everybody knows that we are listing on BitMart on the 21st. Now, listing doesn't mean that it's going live. There is a couple of day period to where people can get their assets in place and before they shoot the gun, so to speak, at a track meet and the race is on. But so we have been having there's a team an integration team who's been meeting with them, and this last Sunday at 2:00 in the afternoon, I believe we were on. And checking all the boxes, going through, got this, check. And then they're like, okay, we need to know who is going to be your market maker. And it was like, at least for me, because, you know, my moniker, I don't know shit. So this is a learning experience for me, an opportunity for me to understand what is market making. So we kind of talked about it on, on the call, and we said, we'll take it offline and we'll discuss it. But we did get what the cost would be to implement basically a market making bot. Max is going to share with us what that means. But I will tell you the cost to just get started is 50,000 Epic coins and $50,000 of USDT. Now, we are a community-based project. There is no CFO to go to, and there is no marketing budget to go to. So it would become a community raise. Okay, it was last Sunday. Today is the 10th. We list on the 21st. There's a lot of work to be done to be able to get a market making solution if that's what is best. And so it was one of these last minute things. I don't know about you. I don't want to give up 50,000 of my coins. I don't want to give up $50,000. But this is for you community members out there who appreciate being informed before something takes place instead of after the fact. So after listening to Max today, and hear me on this, please, please hear me. We are a community of Epic Cash holders, okay? If there is any one of you or a group who understands market making and is passionate about it and really thinks that's necessary, By the way, from what I understand, is like after about 3 months, they end up coming back to you and they say, hey, oh, it's $3,000 a month too. That was the other thing, not just the 50-50. It's $3,000 a month. So somebody in the community is going to have to come up with that, or we're going to have to pass the hat if we think that's a really good idea. If anybody does feel that's a good idea, Max and I were talking before the show, it's the 10th. I think maybe we could have until the 17th to submit our final decision. If somebody wants to take the initiative and spin up a market making group and figure out how we could raise the 50,000 coins and the $50,000 and the $3,000 a month on an ongoing basis, because you believe in it, you understand it, then by all means. Now, when Epic Cash launched, there was a discussion centered around something similar, but it was, we should have a pool. Well, the decision was made to not have a pool and let the market take care of itself. Now, the Epic ecosystem has 4 pools, 4 competing pools, which is mining pools, which is really, really cool because people saw, there were some really entrepreneurial people who saw an opportunity and they themselves ended up making it happen. So Max is going to share with us that the exact same thing can happen with market making. So if we don't pull the trigger on it, maybe one of you out there who's really, really smart with this stuff, maybe one of you takes the initiative to figure out and be the market maker. I don't know. It's not me. I don't know shit. Okay, Max, I hope I set the table for you. Off to you.
All right. So let me show you what a healthy organic market looks like after it has matured. All right, so this is Monero, and what is this? The past 180 days, and you can see it's very very steady. There's some spikes, there's some valleys. Monero is on, let's see, it's on hundreds of markets, I think. Okay, so all of these markets, there is nobody at the Monero company that is paying some guys $3,000 a month, which, by the way, you add more exchanges and then you gotta multiply that. And then it's not just about the 50 and 50. That is an ongoing cost. They ask for a re-up months or even weeks later, depending on market conditions, because what you're essentially doing is pumping heroin into the cyclist so that he wins the Tour de France faster. Well, in that one segment, you're going to get him faster. Maybe heroin and Tour de France don't go together, but you know, whatever cyclists juice on, you know what I'm trying to say. Yeah. So it's not a sustainable thing. So with Monero, you have an organic free market that ends up looking like this. And what do we see in Epic? It goes up, it goes down. Sometimes there's more, sometimes there's less. This is log scale. Incidentally, for those who are freaking out about volatility, Epic has gone up 300,000% in a 21-month period.
What? Say that again.
Okay, Epic's market cap in March of 2020 was $30,000. If you got your $1,200 stimulus and put it in Epic, as of that time, the end of December, you would have had $360,000. So yes, we're down a little bit right now, but Bitcoin Core was down 85% from December 2017 to March 2019. So if a mature asset 10 years later can go down 85%, I don't even think we've retraced quite that much. So when in doubt, zoom out. We are not concerned, and nor should anyone else be. So this is what an organic market looks like. I put it in log scale so that we're speaking the same language. Let's go back to linear, and then you can see that it really makes sense. We had this huge pump and the volume went through the roof. Now we know that's completely organic.
Show us the newbies who don't understand these charts where you see the volume. It's at the bottom.
See at the bottom. See at the bottom, 594,000.
Yeah, move the cursor to the left a little bit so people can just visually see the gray to the left. Yeah.
Well,
So
it's different days. So
yeah, but I'm not looking at the day. I want them to see the little gray mountain.
okay.
That's a
Yeah.
volume spike.
Yeah. So you can see whenever we go for a run, the volume spikes, which is healthy, which is what you want to see. And then the network drips out coins. There's no new news. We haven't, put anything out there that people get excited about. There's no reasons to buy, and the miners keep selling to pay the bills. And then, oh wow, animal spirits. Okay, happy times are here again. We're all rich, and then it quiets down. So this is normal. This is healthy. This
And
is
and
organic.
this just came to me. Go back to that one more. This just came to me for people freaking out about anything right now. If you take a look at the gray mountains at the bottom, right, and you got concerned that yesterday somebody sold, I think, like a lot,
50,000 coins.
50,000 coins.
It was 10 days of mining production on a low volume day. And you can see many days in our recent 6 months history where we've traded over $500,000 a day of legit volume. Now, 500,000 doesn't sound very impressive when you compare it to something like this. Okay, 1.1 million, but guess what? You go to sell, look at this minus 2% depth. So you go to Gate.io, set up your account. Oh, I can sell $480,000 a day worth of volume. No, you try to sell 600 bucks and you're crushing that thing 2%. And because this is an artificial market, that market making bot that somebody, you think our market is bad with the violent swings up and down, that market maker bot pulls the bids on one exchange and synchronizes them on the other. So a ripple in one place causes an after effect in another. And so, this looks like $1 million, but the depth isn't there. So if you can't sell it, is it really, is it really $215 million of value here? Because when I look at $1 million a day of daily volume, and I
Now,
can only sell.
Is that someone market making?
Yeah.
Oh, okay. So this is the tutorial in market making.
Yeah.
So tell us
so
what
this is a
market
project.
making is.
This is a project that has market making. And so basically what you do is you run a ton of volume through. You see how the spikes are disconnected? Like, hey, we did $4.3 million today, but the price is the same. No, that's not how the markets work. So that this market through this collapse from 16 bucks to $1 revealed that this is not a free market phenomenon. Remember, these coins were mined at pennies when it was a test net. So I hate to say it, but
80% of them were mined.
80%. Well, it's 95% emitted as of today, and it was super front loaded. So, this is an example of misaligned incentives because there was just so much money on the line. I mean, look at this. So let me move this Zoom thing over here. So look at the max. Let's see, where is it? All right, look at that. So
I remember that. That was my wife's birthday.
Welcome to crypto. You buy here. Oh my God, I clicked the buy button faster than the other guys who were slower to read the newsletter. Yay, I'm rich, honey. We can retire. We can buy a new mansion. Oh, wait. Should I hold? Remember in here, this is like the beginning of your process. You were like, I'm down. I'm going to wait until it goes back up and I can get my cost out. And then I'm going to buy some Epic. That would have been a very costly strategy, given what happened. And so with these,
you saved me because you don't catch a falling knife, and you showed you went through a process, and you and I have talked about it before. You took the time to go through a process of comparing Epic, what we would need to be able to double, triple, quadruple, 10x my money in Epic, and what would it take with the other 25 coins. We went through coin by coin. And you showed me. And by the time of that, I said, good Lord, the only strategy that I can see is to go narrow and deep in Epic Cash. And we're seeing why. I mean, I would have gotten slaughtered.
And you couldn't even sell. So on paper, you'd be down 95%. But if you went to sell, you'd crash it another 90%. And then the social impacts of, oh, I guess the FUDsters were right. I mean, it's a shame. It's beautiful technology. If you like pirate chain technology, I encourage you to check out Hush. It has the same 21 million emission as we do and a fair distribution. And notably, it does not do any of this. So this is what happens when you have an inorganic centralized project. This is MWC, another project that uses the Rust Mimblewimble code base that we do, and they do very fine work. But it started life in sin with a giant pre-mine. And if you look here in this like May of 2020, at this,
what are we looking at? I can't.
This is Mimblewimble coin.
Okay, thank you.
Yeah, so Mimblewimble coin. And so if you do the math, $13 times the I think 11 million that are out there, this one has a market cap of like 7 times what we do. And if you look at it, wow, 140,000 volume. But then you go here, we should really do some trader education through FreeU now that I think of it. So here, you can sell $1 on scammy exchanges that rip you off. Hotbit got me for a lot of money.
Wow.
Burn in hell, Hotbit.
Wait, Trade Ogre, you can't sell any Mimblewimble. Is that what I'm saying?
No. Well, you can't sell any within 2%. So like we can go and check the order book here. So let's go see. All right. So I'm finally ready to tap out on this Mimblewimble coin. And let's see, you can sell 94 units at what is that? 31,000 sats. So you can sell 94 units times 13. You can sell about $1,200 within, what is that? It's reporting at 34. So you can sell $1,200 if you get a $12 price versus the 1341 that it shows on there.
So that's what. So the more you sell, the more that 1341 is going to go to 12.
Well, 11. And look at this, and the guys that are behind it have this. I'm going to show the market my strength here with this 1,000 buy wall. So this is completely artificial. Look, 1,000 here, 2,000 there. That's like whales playing with each other, and then in between, like there's not this much trading activity. This is all just robot to robot. Who's running those robots, and what are they doing? What they're doing is harvesting money from newbies in a process that looks like this. So look at this huge volume, $86 million. If even like a few percent of that was legit, the guys that got these pre-mined coins, you know who you are, were out there selling them at $24 based on the type of tactics that we do not do. $150 crypto potato articles, breathlessly extolling the future of technology. But spend your $20 here on our coin. We don't do that kind of stuff because it leads to people getting hurt. So this thing, whatever it looks like, and that's the other thing is that people look at dollars and, oh my God, we're getting rich. It's good again. Oh no, now we're going back. Well, no, look at this. It's just a steady decline in BTC. This is another one of those that if we go from the height of the pump, or let's do let's do here and uncheck that. All right, so you started out at 289,000 sats in April of 2020. All right, so far you see where I'm getting that in the gray at the bottom. Okay, so 280,000 sats. And today it's 36,000. So what have you lost? 85%. So in the same time that Epic went up 300,000%, these guys lost 85%.
Wow.
But they were way ahead of us based on the pre-mine. They were doing paid marketing. They were doing basically every unsavory tactic that you could think of from the 2017 ICO boom. It's like, hey, let's party again. It's 2020. Let's do it like back then. I mean, it was comical, and the pressure. I can't tell you how many DMs I got with people saying, "Hey, asshole, you need to go spend 50 grand to get on Hotbit or Bit4x, or even better, 350 grand to get on Ascendex, formerly BitMax, formerly the last name that they screwed everybody on, also exposing our users to risk, because it's going to pump my coin." So, we've had this slow and steady wins the race based on the fundamental free market principles, the scarcity, and never compromised our integrity. And so one by one, the networks that are ahead based on the expedient short-term choices end up falling by the wayside because they don't have the staying power.
So then what happens then when you list like on a BitMart and you don't have market making? I presume the first thing that pops into my mind is people are going to look at the trading volume and say, oh man, there's just hardly any trading volume there. Whereas if you had a market maker, it could be like $1 million a day. Wow. Right. Is that one of the consequences of not? And I say consequences intelligently. It's because, I don't mean it in a negative way.
Well, and it speaks to the education level of the people in the casino, because if you talk to the average proverbial shoeshine boy with a stock tip today, that's an Uber driver or a bus boy telling you about how much money he made on Doge and Shiba, and how Floki is going to be the next one to 10,000x his money. They are accustomed to looking at these ginormous volumes. So when you look at us, and what did we have today? 112,000. Oh, what a shitcoin, right? The market cap is lower and the volume is lower. But guess what? This is 100% real. You can actually go sell this. If that guy who wanted to crush 10 days of market supply only took what, I don't even know the percentage hit, but we came right back. Like
back.
Buy the dip, people go rush to buy. I mean, I don't know about you, but if I had spare dollars or spare any other currency, I'd be all over that. I mean, it's ridiculous. E3 is coming, and so what we saw during the value overflow incident was that as the market was crashing, it really showed who our fair weather friends were, and who the panicked, focused on the sky is falling people were, and who are the people that went and said, hey, I'm gonna liquidate these other positions because this is a really attractive price. I don't need to own XYZ coin anymore. This is a great deal. I'm going to go buy. People rush to go fund their accounts in the fog of war and make that happen. Incidentally, that's why we felt it was so important to issue the IOUs. And these issues get to, or these topics, market making touches on centralization, governance, and transparency. And so we
unpack those. Because right, and I want to just quickly tell everyone that when I heard that we needed market making on Sunday, I mean, I don't know shit, right? But coming from BitMart, right? I was like, oh, well, we need to do that. That's a freaking issue. And it pissed me off that we were only learning about it, on Sunday, because I'm like, who's coming up with 50 grand? I mean, we have to go do a community ask. And Max, you called me and we had a heated exchange, and you were basically educating me like you're educating everyone else today on, you have to step back and you have to let the organic market take care of it of itself if you want to play long ball. Otherwise, you're going to look like every other pump and dump coin out there. And are we in it to hit, $20 by April 1st, or are we in it to overtake Bitcoin over the next 5 years? I don't know. I'm coming around slowly, Max, that your instincts have been really, really strong in the defensive design and the reasons why you don't do what many people ankle bite saying you should do, or we should do, or the group should do, or the community should do. Okay.
Yeah. When you make short-term compromises that jeopardize the long-term future, that often stems from incentive misalignment of different groups of stakeholders, people that came in today, people that come in later, people that have put in their time, how much time, merit, all this stuff. So as a community project, we are following in the footsteps of other proof of work based coins that have a similar structure. And so of the top 100 proof of work coins, pretty much every single one does it the way that I think we should do, which is to let the free market take care of itself. And I have four awesome solutions that I would encourage technically inclined people to look at. If somebody needs to come up with 100,000 for a short-term artificial boost, wouldn't we be better served making a long-term infrastructure investment? So, maybe we should have a grant program or something. We do have a self-funding treasury for the DAO. Right now, there's about 100,000 Epic in it. I think we should take some portion of those and buy back the EIOUs, even if it's just symbolic, $1,000 or whatever. There you get into the transparency issue, the centralization issue. Who's doing the custody stuff? We don't have multi-signature wallets. When people ask us, okay, what's happening behind the scenes, under the hood, we open ourselves to accusations of self-dealing. Nancy Pelosi is the best stock trader on the planet. I don't want to be accused of any of that stuff. You're damned if you do, damned if you don't, in this type of game. So, we need to develop a grant program where we can use our treasury in the right kind of way and tick all of those boxes. And in order to do that, ECRG, it's not on the subway map, but it's going to be added. That is a treasury masternode system based around the proven Dash structure. And so we've surveyed the best of the market as far as how these issues get solved, and done our best to avoid centralization, because it would be all too easy for, hey, uncle, let's get together with some other whales and decide how this is going to be. I mean, we could do it the Ethereum way if we wanted to, but then long term, we would have the Ethereum consequences, which is when push comes to shove, Infura turns off users, MetaMask turns off users. They have no choice. We have flexibility to preserve our integrity no matter what happens in the wider world, as long as we stay true to our mission of decentralization. So, we need to figure out our shared standards of behavior. What we're doing right now as a community is figuring out the social layer that is adjacent or atop the immutable code layer of the transactions between us. Epic is basically a social network where the communication is not memes and pictures and Facebook posts and tweets. It's financial messages. We trade ownership of these 21 million slots of land on the digital real estate called the blockchain. And so governance is the trickiest problem in all of blockchain. We think Dash is a leader. Decred does a great job. Tezos has some innovative ideas. A lot of good stuff on the ERC20 side with projects like Compound.
Oops. Lost you, Max.
Yeah, phone call. Nobody has the right answers, and the decisions that seem right at one time turn out to be wrong at another time. So Cardano had a legal problem with its foundation. Ethereum had a legal problem with its foundation. Tezos had a legal problem with its foundation. Maker, their Dutch foundation, got caught up in a lawsuit in California. Compound threatened to dox its users if they didn't return funds to the IRS. Hey, we have a bug. We sent you free money. Give it back or we're going to dox you to the IRS.
Jeez.
Now, those poor guys, okay, we're a decentralized protocol, but we're also a company funded by VCs. And we have fiduciary obligations to our investors or to our mandate or mission as a foundation. And so we really have a powerful set of strategic advantages that are going to benefit us long term, because we haven't allowed ourselves to step knowingly into the same minefields that other projects have. And by not taking losses, we're best set up to win.
I like it. So what are we looking at here? We're looking at
all right.
trading.
So Yeah, so this is an example of the free market at work. So the main venue is Vite, but one of our pool operators, Robert at Fast Epic, set up an automated market maker on Stellar. So Stellar is now growing as an option. I was surprised to see that there's been 1,152 payments. You can get faster payments through your mining pool over Stellar than any other way. So we're seeing the free market at work. Epicmine.org. Here, let's look at we've got 4 mining software packages. So we didn't pay any of these people. We didn't go talk to them. These things just happened. Like if we went and had a kick-ass miner that did all the optimizations and synced between AMD and NVIDIA and did this and did that, then there would be no opportunity for these guys, and we would have 1 miner instead of 4. So by anytime we do centralization, we are preventing this type of stuff from happening. And so I would encourage people to look at the following things. I've looked at them briefly. The details really matter as far as how these things can be connected so they don't blow up and you don't reintroduce trust and centralization and permission and all that stuff. But essentially, Hummingbot is a programmatic market maker. It's open source and driven by all that crypto goodness. Firo uses it. So maybe if somebody from the Firo community is listening, you can share your wisdom with us. There's Thorchain, which is based on Cosmos inter-blockchain communication. A lot of our stuff that's coming is also based on Cosmos IBC tech, but it's not there today. And this does exist. Injective protocol is also very interesting. It's a decentralized L2 to L2 type of thing. And then Orion protocol, which is trying to be a bridge between DEX and centralized infrastructure.
Wow.
So all of these things would be well worth a look because the thing is, if we go and do the centralized way, like pretty much every other project out there that is a token or is a centralized layer 1, the decentralized layer 1s, nobody does this. And if we do this, the people that are in those decentralized layer 1s, the OGs, I've been in Litecoin since 2014, Litecoin till the death. I'm a Dash guy, I'm a Decred guy, I'm a this guy, Verge. Like those people would be very turned off, and those are the ones we need. Like Wolfie is a great example. He brings a lot of wisdom to our growing pains by saying, hey guys, don't worry about the FUD. I told you were gonna take flack at 2,000 members. And what do you know? Here they show up. I mean, this is our first rodeo, but Wolfie was there for the birth of Verge, and we benefit from his experience.
Wow.
Or Diego in Monero, or Duke at Hush, Ruben at Firo. So we learn from all of these other projects. And I think if we make a sustainable investment in infrastructure that's not going to go away and that is self-supporting because it's a code-based solution rather than a group of guys reaching into their pocket. So if we went the centralized way, then about 60 days later, they would ask for more money, and we would have to decide, whoever made that decision for whose ever benefit as of the first time, would face a choice. Where do we get that next money from? And then who benefited? Did everybody who owns Epic contribute to that? No. Where did the money come from? Who's winning and who is losing in this? What is the transparency around that? How are those decisions being made? Tell me about your governance. These are all things that we're going to be held to a very high standard 100%, on, 100%. And we need to have answers.
100%. I mean, and that's where you and I had our conversation, which got heated. And I'm like, Max, I have 2 ears. I heard the guy. He's saying, look, most all the projects that list have market makers. And so I'm like, I'm pissed off that it's taken this long to know this, because give me 2 months to try to be able to talk about it on my show and explore it and everything. But we're 2 weeks out, and you were like, chill, relax, don't worry about it. We really don't want to go that way. And here's why. And I'm like, no, I think I heard them. They said everybody does. So Max, would you please educate us? When they say everybody does, educate us, because what I heard from you, you were saying that's what tokens have to do. And we
Yeah.
are a layer one protocol. And how many layer
Yep.
one protocols are there that are proof of work that are viable out there today? That's what I think people don't understand. There's 17,500 assets out there. Please educate us, Max, on why we are different than those 17,500.
Okay, so out of the 17,500, let's say maybe 500, if I had to guess, certainly less than 1,000 are proof or are layer ones of any flavor. There are dozens and hundreds of just like a kid in a bedroom spends 30 minutes to create a Bitcoin fork and it just hasn't been unplugged yet. Or, you know, like crypto note coins. There were basically do-it-yourself Monero or Bytecoin fork generators, Bullberry, and things like that. So if you exclude the silly ones and say actively developed, serious layer ones, you're probably talking, I'd say 100, something like that. It's pretty rare air. So everything else, so 17,000 of them are tokens. They're assets that don't run their own protocol. They just are ledger entries, programmatic money that lives on a smart contract platform, such as Ethereum or Avalanche or Phantom or Solana or Cardano or Cadena. There's about 30 smart contract platforms. Incidentally, we will have support for the widest range of all of those that I just mentioned and more through eDex. So stay tuned for more on that. So what is that? About 99% of the market is tokens, and 1% is layer ones. And within that, most of those layer ones just aren't technically dead because it's impossible to kill a decentralized proof of work network. There'll always be someone mining Grin as long as there's a coin that comes out of the Coinbase and it's worth to plug in the miner. You know, so tokens. When BitMart says
But
everybody does this.
Hang on, real quick. I just sorry to interrupt, but so really, what I heard is there are about 100 layer one coins out there that are viable, that are productive, that are working. I would love to do a show, or if somebody's watching, somebody do a research project to identify the top 100 of the layer one coins, the ones that are viable and everything. And then it would be really interesting to go back through each one's launch and history and just map out how's Epic doing. And I think we'll probably find we're pretty good shape.
You know what? I would have to pull the data. I did it for my own edification, not for anyone else to see. But I did that, not for the top 100, but probably the top 50 at least.
Okay.
So in proof of stake protocols, as an example, you know, they often split between the founding team, the original investors. If they did an ICO, is there an ongoing centralized foundation? So if you compare Cosmos as an example, the Atom token, they pre-mined to do an ICO 236 million tokens at 10 cents. And so that was 23 million at a diluted valuation of 29 million. So the thing started priced at 29 million. Today, that's 9 billion. So those guys have gotten a 300x return. That's pretty good. But now you have an issue where the founder of Cosmos is out launching a fork to fix what he feels is an unfair distribution. And now Cosmos is going to have some interesting times on their hands when formerly they were unified. So networks such as Dfinity or Chia or Solana, these ones that are very Filecoin, Polkadot, these ones that are very VC driven tend to be very hazardous for the small scale investor who doesn't know when they're consuming marketing material versus a legitimate breakthrough, capability of some network.
Max, what drives you to be so passionate about about wanting to win the race in the long run and not compromise? Because as far as I've known you, or since I've known you, you have resisted at every turn any pressure to compromise, even if it's releasing E3 too early, or you know what I'm talking
Yeah.
about.
Yeah. Well, it's because of this. It's because of this. So I know a guy, you know who you are. If you're listening, probably not. So I know a guy who bought here, let's go back, who bought a shitload of Dash back here. Guy started with like a half a dozen ASIC miners back when nobody knew about Dash. And he's mining. Okay. Now Dash goes up. These master nodes, you have to have 1,000 coins for a master node, got up over $1 million a piece. There were people setting up Wall Street vehicles like these SPACs of today. There were people setting up vehicles so that people could invest in the stock market in Dash masternodes. Like the financialization, it was like mortgages with the CDO cubes, because it was paying so much yield, and they were just like, yield, and then, well, wait, okay, now the network has to go compete out in the market, and if you are a currency, which Dash is, then you have to compete against the best currency in the market, which was Bitcoin Core until Epic came along. So let's look at 2017, or let's go here to 2018. So a single Dash coin was 0.08. So 8 million sats, something like that, 8.85 million sats. And then today, 5 years later, 237,000. So you had 8.8 million Satoshis per Dash worth of value. And today you have 247,000. Imagine you put $8.8 million in a bank account for 4 years, and then at the end you get 247,000. Now, at least this is liquid. They're honest people. They have a good product. They're out there doing it. But this thing has been a loser. And so, if we had started earlier and we didn't, we would have looked really weak and lame compared to these guys who got out ahead. But like, look at this. Do we ever have to worry about anything from Dash? No, of course not. And they've moved on. They're playing a different game. You know why? Centralization. Because they set up a hedge fund structure in the Cayman Islands where they're doing biz dev deals. These guys, they created a company, Dash Core Group, and the network makes money for them. Awesome. That is fantastic. They made what, $1 billion here? Look, $1.2 billion of volume at 336 million a day. You can go and sell Dash. Look at how liquid it is. So you can sell Dash minus 2% depth. You can sell hundreds of thousands of Dash all over, no problem. But from a long-term store of value perspective, it really doesn't work. And if you unpeel the onion and look at the incentives of the people involved, that's why we gave a tremendous amount of consideration to, for example, the emission curve, which takes 9 years to catch up with Bitcoin Core after 19 years. There was a lot of discussion. Should it be 1 year? Should it be 4? Should it be 7? Should it be 14? Should we just leave it as it is? You think our discussion yesterday was heated? Imagine screaming matches like that for months over just that one issue. Wow. And it was the people that, it was the guys that made the money on the Dash masternodes going, guys, like Mimblewimble's hot. We can make $100 million. Just who cares? Let's make $100 million. And then, we'll do the next one. Flipping burgers. We're not here to flip burgers.
Right. Okay. No, all of these conversations that we have and the time that you invest in this channel, I thank you, just continues to make me feel better. I mean, because I haven't been experienced in crypto for years and years, just over a year. And so some of these cycles, haven't lived through. So, when in doubt, zoom out, and it looks like we're doing just fine. And man, there's so many exciting things that are happening now. E3 is supposed to ship. It was on the
tomorrow.
9th, but now it's
tomorrow.
It looks like tomorrow. I know you already showed a little. You dropped something in one of the channels that was basically What would
Yeah,
that be? When you ship something, is it just being the
it's just we throw it on GitHub and our website and say, hey, everybody, it's time to update. And then, if the miners control the network. So if the miners don't like E3 and want to keep running, you can keep running 217 as long as you want. But if the majority of the community wants to upgrade to E3, and they will, because we have alignment on that we should do this, and this is the feature set. It's very, very carefully considered. There's no risk of a contentious hard fork. We have unity of will and direction and purpose, and part of the reasons why that doing that makes sense is because we have access to beautiful stuff like this new E3 GUI wallet. So not only do we fix the embarrassing typos and poor color choices of the long in the tooth E2 GUI wallet, we get something that is easy to use and we can really be proud of, because it comes with Tor support out of the box.
Is that already launched?
Well, as soon as we ship E3, then people can use this new
And like
E2 wallet.
I have a GUI wallet, which I have a total of 40 Epic in because it scared me to death to actually transfer anything. But if I go into that, will it automatically be updated to look like this?
So you download the E3 software,
okay,
and install it, and you're good.
But I already thought I downloaded.
Well, you have you have the keys to 40 coins on the blockchain that you have accessed through your E2 desktop GUI wallet.
Right.
So you will not use that wallet. You will access those same keys through the E3 wallet that looks like this. And this is the Mac version, by the way. So this is beautiful. This is like I'm proud of this. And it's going to get better over time because the careful way that we built it. Do you know how hard it was to get it so that people could update from the V2 wallet to the E3 without having to like read instructions? I mean, that's why the testing took so long, because people don't read instructions and they're like, oh, I skipped one line and I forgot that. And so to make it really usable, if 1 out of 10,000 people have some kind of usability issue and you get 1 million users, that's 10,000 frustrated people who are giving you 1-star reviews. A dissatisfied small minority, as we've seen in certain environments like the trading channel and other the troll infested places, they seize on that type of stuff. And so this is a release we can really be proud of. And the way we did it with the care involved, and decreasing technical debt and extending test coverage and investing in documentation and communication and all the things that we're going to need to ship out 4 and 5 and 6 and 7, and all of those become easier because we have reusable infrastructure that we created for the long haul. Because if we knew it would take longer than just quickly shipping something, but it's also like the time for E3 got slower, but 5 got faster, and 5 definitely got faster, and 4 probably got faster as well. And then as we get into 6 and 7 and 8, we'll be banging out releases faster than anybody, because we've made it a priority to get to a very fast update cycle. So issues there like GitHub versus GitLab, and what happens if GitHub, which is controlled by Microsoft, decides to nuke privacy coins, as an example. We have a risk in our development in the form of GitHub. Now, it's a very unlikely thing at this point, but these things can change. And so we need to be forward thinking, and as always, design defensively.
See, that's what people don't give any credit to. Any of the people who are in the trading channel, or any of the disgruntled whales, or any of the people that in a temper tantrum decided that they would leave the project because E3 hadn't shipped in the fourth quarter and BitMart got delayed. And, people don't give credit to the fact that we're really playing a game of 4D chess here. And I had no idea about GitHub and Microsoft. And you're right. That could be a huge blocker. I mean, that's a holy shit.
Or what if they put in some backdoor in the code that people assume it's honest and then it's not in some tricky way? You know, it doesn't matter till it does. Zcash, Zcash hid a critical inflation bug from the world for 11 months. And here's why centralization really matters. Okay, so Zcash, and I really like Sapling. They do a lot of fine work. This is not an attack on Zcash. It's just highlighting what happens when you have a VC-driven electric coin company getting a profit stream on an ongoing basis from the miners. There's a company taxing the miners. That's why, as an example, our self-funding treasury, it's not a tax, it's not a profit center where we're eating caviar eating caviar from it. It's just, you know, for if we want to go and build something, there are resources available. I think if we made it optional, people would still continue to pay it. But even in the meantime, it goes down. So 6.6% right now, next year, 5.5, 4.4, 3.3, 2.2, 1.1. So we gave ourselves a slow and steady runway to make sure it's baked into the code and can never change, that there won't be an ongoing centralized group of people that have an incentive in keeping their jobs going that may be at odds with the interests of the people involved. And so Zcash had quite a few forks, other projects out there that wanted to use the Zcash tech, such as Pirate Chain, Hush, and Komodo. Those are probably the main ones that exist today. There may be others. But essentially, they had this bug that could have allowed unlimited minting, despite multiple audits and peer review. Like, the smartest people in the world could not figure out that there was this bug here, and so they knew about it. It took them 11 months to fix it, and then what they did is they told 2 of the forks to fix it, and they didn't tell all the other guys who were hosts. So, so they basically decided to kill their competition and play favorites. So one of our design goals is what's known as a credible basis of neutrality. And so Zcash is not credible as a neutral party. And if we did things like favoring any pool, favoring any miner software,
Right.
favoring any wallet, any exchange, you know, any whales versus small people, I mean, you know, these things matter. They're going to, what we do today, we're defining our DNA and our culture, and we need to decide what breed of cat we are and what we're all about and who we want to be when we grow up. Because networks, you know, when I look at Ethereum, it's a tragic story because it started out with a 70% pre-mine and then was driven by early whales. And in the case of the DAO hack, they said, well, we're going to rewind, we're going to fork to punish the hacker. Code is not law, our word is law. Okay, so you have a centralized group of people that have decided that their interest lies in proof of stake. Well, of course it does. Why would you bother? Like, Ethereum miners earned $1 billion off of ETH in February. So the ownership of ETH says we got to have some decentralization, but not too much. So we're going to cut off these miners because we don't want to spend $1 billion a month in mining fees anymore. We would rather direct that into our own pockets, because in order to secure the network, you have to deliver staking rewards to the validator nodes. So right now, our network has 9,000 proof of work nodes in 1,700 cities. ETH 2.0 has 250,000 validator nodes. There will never be more than 250,000 validator nodes. There will be steady consolidation over time. We will rapidly surpass the amount of nodes and then go to a level nobody's ever seen before, because we were able to preserve the incentives that keep us maximally decentralized, which is staying proof of work and making sure that we have accessible mining. So once we ship E3, EZK, some people have seen the Google Doc or the white paper for that. That's basically a sneak peek at the features that we'll have for Epic in future versions. And 2 of the main features are random ARM mining. So 15.1 billion mobile and tablet devices can secure the network through mining, but also proof of space time. So if you have some unused space on your phone, tablet, hard drive, PlayStation, whatever, all of those devices can come on and secure the network as well. So we get to test those and see if they can help us put Epic into more hands at the beginning of the funnel, and I think of course it can. So it will make sense for us to incorporate those features in Epic in the future. And the best part is we don't have to have a backdoor, like some kind of switch where we just go, like Bitcoin Core driven by Blockstream. Those guys decide how it's going to be. And if you're not part of their club, you're not part of that story. It's just completely, it's a dictatorship basically. And in our case, like if we tried to have, first of all, I don't even know who the we would be since we don't have a block stream. But if there were that case and the miners didn't like it, it wouldn't happen. And so, but we are unlikely to face a schism. The reason we have Bitcoin Cash and BSV, BCH and BSV is because they had fractious, contentious hard forks related to what? Scaling and centralization and choices that got down to the heart of governance. And so we want to stay united. We want to grow stronger and not lose any of our people along the way to disagreements. And so I think if we did market making, we would undoubtedly accelerate our path to pick a number up from a buck. We would get to some number faster. But you know what would terrify me about that process? Yeah. Who's going to be talking to who and saying what? Hey, Bob, you got to buy this. It's going to be awesome. Well, if they said, hey, it's 28 cents, it might be a buck. Okay, cool. If you got from 28 cents to a buck over the course of a year, that's not too bad. But because it happened here, that creates all kinds of social tensions.
Wow.
Or this one, right? Like, so look at these poor people that were victims of these manipulations. We can avoid that by not doing stuff like, if people want to throw money at market making, great, but let's please do it through a decentralized way that isn't going to go away, because centralized infrastructure is vulnerable. You cannot secure centralized infrastructure against all threats. Things like BitMart hacks happen. Even in DeFi, they happen, but you can harden the infrastructure. And so above all else, I don't think we should create a temporarily expedient dependence on centralized solutions. We have a more centralized network topology coming with the trading volume that BitMart will inevitably bring. That right now we're very decentralized. We have Vite, which is a DEX, and Stellar, which is a DEX. And I know people are working on hooking us up to other networks. So we're going to be decentralized and stay decentralized. But now we have this catalyst called BitMart coming, which of course it's the easy button. Volume is there. It's a familiar interface. I don't need to learn anything new. So it's going to have a fairly big market share. But you know what that's going to present a problem on, aside from the potential fractional reserve issues of them lending out our coins so that some hedge fund that wants to take a position doesn't have to buy them, they can borrow them. So we're inflating our supply in exchange for convenience. And also here, let's say at the pool level, this is not as concerning as it seems. It's not as if ice mining is going to shut down the network, but you want to have less than 51% in any place in a proof of work network. And so we've got a little bit of not a red, flashing red, but maybe like a soft yellow, need to be aware, which is why I want to get these other pools, 51 pool, Epic Mine, and Fast Epic on your show to talk about the wonderful things they've been doing.
Bring it.
Yeah, because I think if people give the other pools a chance, they will find what they like. And this is entirely organic versus centrally driven. And so, how did Epic get listed on BitMart? If we're faced with a similar choice in the future, we get listing offers every day. What is our process for deciding that? Who is invited to those discussions? What level of transparency do we have about news of what is coming? I mean, we've been screaming from the rooftops that BitMart is coming on the 21st. But, I get people from months and years ago contacting me going, hey, you jerk, why didn't you tell me such and such was happening? And I'm like, we did at our maximum volume. You just weren't paying attention. So we do our best.
We do. I just have one question, Mother Trucker question. Will someone be posting a link to download E3? And is it important or necessary to do this on a PC? So I presume you can do it both PC and Mac or Linux, right?
Yes, PC, Mac, and Linux.
Linux.
No
Yeah.
tablet, no mobile out of the box, but those will come fairly quickly after we get the protocol out of the gate.
So E3, now that it's shipped or will be shipped here shortly, that is what's going to be allowed for other wallets to be spun up, right? I know Diego's working on one, and
Yeah,
that's another thing I've learned about is that in my mind, it's not just going to be the Diego wallet. There's going to be people that are creating different wallets.
we
So
want lots of wallets. Yeah,
yeah,
if you're a UI developer, if you have wallet development skills, set up an Epic Fund Me, and that's an investment that I think is worth making. If somebody wants to make wallets, we need DEX functionality, basically building in the VTEX functionality directly into the wallet. And then also some of the governance token stuff. There's no reason we can't integrate with WanChain and Polygon directly. And then through eDEX Atomics, we're going to be bringing on the ability to atomic swap directly from Epic into BTC. And then after that, so E4 will be Epic to BTC atomic swaps. E5 will be Monero. E6 will be Firo and Zcash, and then it will be Grin and Hush and Xano and CCX. So basically, we need an interface that doesn't start off looking good when it's just BTC, and then it looks terrible because we were starting with one coin and then it became 2 and 3 and 4 and 5 and 7. We need to have a flexible interface that can adapt as we grow. So decentralized exchange, chain to chain, the order book functionality of Vite, and basically, as Todd always says, if it's banging ones and zeros together, then it's doable, and our creativity is the only limiter. And so it's an open ecosystem. People tend to be rewarded for their innovation, and if an investment makes sense, then people do pony up for it. So I think through here we've identified that. Do we want higher volume? Yes. Do we want to create an ongoing point of centralization and potential contentiousness and also vulnerability? Probably not. And if we do, we probably want to have that as a one eye on the today, but the other longer term priority is to get the right way in place. Maybe something makes sense short term, while we work on something that takes time. I personally think that all we need in this area comes from E1, because when we have the wrapped Epic, then those 17,000 DeFi tokens, a lot of those become copy paste to adapt to what we're doing, or to take our asset and plug into those networks. So based on our availability, our accessibility to people today, without being on those rails, we are prevented from getting 99% of the existing market. And so if we solve for those, we could rapidly have a dramatically greater coverage than even 12 BitMarts could give us.
And we're working on that.
Yeah, absolutely. The time that is not going into managing sentiment around this type of stuff, or entertaining centralized short-term solutions, is going into the engineering. And so I know we've showed a lot of leg on not just E3, but the spec of E4 is basically done right behind that. It'll come out as ECK first, and that accelerates our path to bringing on billions of new users in a safe way, because guess what? All the code that we're pulling into E3 has been out for well over a year. So if it's been used in multiple other networks for over a year, then we can trust it. So we've gained a lot of safety by not introducing new problems with things that are less tested. So we're kind of having our cake and eating it too here, because we can innovate where it's safe, and we can be slow when it really doesn't matter. And so as an example, with something like non-interactive transactions, one-sided transactions will probably come in E7, maybe 6, if we're lucky, but we can do two-sided, in other words, lessening the interactivity necessary to do a transaction. Right now, Mimblewimble is 3 steps. The one-sided transactions, we would be blazing new trails, and that would be probably 9-12 months of development, which is a big enough ask in the beginning. But also there's the risk that if we missed something, that we would be exposing our users to risk, because it was very traumatic to have the value overflow incident where we had to rewind, we had to go get old chain copies, we had to issue the IOUs. I mean, we got lucky that we were able to pull it through. The next time, there will be no next time, but if there were, we would be dramatically more prepared based on that close call. So when we can avoid creating problems for ourselves, we probably should.
Well, good. Well, I think we're at an hour. I know I got to hop on a Zoom call here shortly. So thank you, Max, for coming on. And just thought that this was a very, very important piece of the puzzle that people needed to know about, because I think that what Todd Radamas here said, Uncle Todd Radamas was like, look, there are going to be ankle biters in our future who are going to be bitching at why we don't have a market maker, right? And so if you're that potential bitcher, it is the 10th. Thursday. So by next Thursday, the 17th, feel free, talk to us to bring 50 grand to the table, 50,000 coins, and commit to $3 grand a month somehow, some way. I don't know. That's what makes a community rock and roll. But please don't ever say that we didn't educate you on the pros and cons and the costs. And that's where I'm going to leave it. Now we have a video that when those future ankle biters come in and start bitching about the spreads that are, on BitMart or on Vite or whatever, is I can just copy, paste a link and send them this.
Well, and not to focus too much on the negative, but I think this is very important, because the person that is bitching that the spreads are too high does not feel that they can or should or are able to or whatever go close those spreads by taking action themselves. That person is showing that they have this opinion that there is a group of guys that are responsible for tightening spreads, and he is an entitled client that is lodging a customer service problem, with the customer service department because he's unsatisfied versus expectations. No, dude, how about you go and close the spreads? Why don't you make a bot? If you want to do a market maker, go do it. So that implicit assumption that there's a passenger and a driver, and that the passenger can go, hey, turn left over here, and keep your hands on the wheel. Like, no, are you driving? No. Okay. Well, would you like to drive? Go do it. Nothing is preventing that person from solving that problem except their belief that it's someone else's responsibility. If you want something done, go do it.
Ding, ding, ding. We will end on that. All right, Max, you rock and roll. Thank you, everyone in the chat. Love you. Keep coming back, guys. All right. Cheers.